Join TWR in 2023. TWR Tweaky Tuesdays.
I'm on it. Hey, you know I'm on that though, man. Y'all, come join it. In the traders war room, warring with the market every day. We on Zoom. Never gonna quit. Ain't no way we gonna lose.
Stay tuned at the end for new upcoming events. How's TWR doing thus far? All right, so first up, our Baba swing. We went ahead and secured today $50 per contract, but I do want to bring your attention. Check down here. All of our alerts have time and date stamps because we keep it 100%. Apple 140 put. We went ahead and secured this for $90 per contract, running total 140. Rio quick swing, $45 per contract, running total 185. Closed Meta, $87 per contract, running total 272. AMD, this was a day trade, plus 45 per contract, running total 317. And finally, SPY, another day trade that we left a couple runners into tomorrow, $30 per contract, running total on the day for profit secured, 347 per contract. Assumption on total is at least one trade per alert, near or at my entry and exit. $100 to $1,000 per day is possible when you're a TWR market warrior. So quit wasting money. That's not making money. Join TWR. The links are in the description. What's hot and what's not. All right, so the market was rocking today, even forming the cup right here. Now, all we need is the handle so we can get some maybe continuation if it's a typical pattern. However, if the Fed news is extremely more hawkish than people are anticipating, we'll probably drop off a little bit. So everything pretty much relies on this man, Jerome Powell, and the words he uses in his speech and how tight he's getting with quantitative tightening, or how much loose he is proposing, maybe even pausing on these interest rate hikes. Here's a market summary of popular stock ETFs. You got the SPY, the Q, and IWM. Everything way green, and we are looking like potentially we got the next bull run. Futures are red, but remember, we're not really interested in the futures after hours. What we really want to look forward to is the futures and how they look pre-market. Here's the flow, almost 50-50, leaning a little bit more to the bull side. Dark pool, no surprise, we got the SPY and the Qs in there, but I do want you to pay attention. We're starting to see some of the financials come in there, all right, especially the financials that are dealing heavily with financial technology. So keep those on the back burner. The fintech things are definitely extremely popular and looking to pop. And your sector performance, everything was green across the board. Now we'll look for materials and consumer discretionaries to probably cool down a little bit as they boomed harder than they normally do. We're also looking at utilities and energy sectors to maybe pick up some of the slack and some of the funds rotating into those laggers. All right, so your top news is the U.S. stock market hit the January indicator trifecta, but can a rally last for the rest of 2023? So basically, investors are hopeful that we hit all these bells, and it's exactly what the bull market wants, right? And they're talking about a bull market nirvana for the remaining of the year, especially if we get the slowdown in the Fed interest rate hikes and also the softening recession that the Fed is still talking about happening. Now, there's a lot to still be said about this. However, it's optimism, but there's still the bearish sentiment overhanging. So you got the hopes of optimism, but the reality that we're still looking very bearish when we're looking at the economic certainty out in the future. And then finally, AMD stock rises and promises to keep taking data center shares from Intel. Man, Intel just absolutely got hammered, and AMD is picking up the slack. So definitely AMD is one to keep a watch because this thing can skyrocket, especially if they continue taking shares from Intel. And if you look at their market cap, they used to be kind of neck and neck, and of course AMD back just a few years ago was nothing, but they got a lot of quick market cap coming into the space. Intel is now just dwindling compared to AMD, so definitely paying attention to AMD is something that every investor that wants a great fast-paced growth company should be paying attention to and watching very carefully. Other news, I thought this was interesting. So there's a viral 1 billion startup, and it's aiming to revive the extinct dodo, and not just the dodo, but revive other extinct animals. And so basically, the CEO, Ben Lam, joins Caroline Hyde and Ed Ludrow to discuss how the biotechnology startup, which released a valuation said to be over 1 billion, promises to resurrect the most famously extinct animal of them all, the dodo. And I don't really know if this is just supposed to be kind of funny or even if this is possible, but we'll see what happens with this. But definitely paying attention to biotech, because biotech is something that is finally, the technology boomed so hard in the past 15 years, right? And kind of healthcare took a little back burner. But now technology is so advanced that biotechnology can come in and utilize the technology improvements that have rapidly increased the capabilities of the biotech sector. So look for some outstanding things in the future. And if you're not paying attention to biotech, you need to, because there are opportunities in this sector, and this could be the next boom wave. And here's a little bit more information about Colossal Biosciences so that you can read up. I'll leave this here so if you want to pause and kind of read up on this. But definitely Google Colossal Biosciences, see what kind of information they're utilizing. But definitely get spun up in some of the biotech, because the biotech names, you're going to have a lot of losers out there. But some of these that are going to be winners are going to win, and they're going to hit hard. And finally, I thought this was kind of interesting because the typical checking account pays so little interest that more people are moving their day-to-day banking into their brokerage accounts to get a better return on their cash. And so Fidelity, Charles Schwab, even Robinhood are some of the brokers that are seeing a robust improvement in people transferring over and putting their money into equity markets and ETFs and things like this, and kind of managing or allowing the company to manage it as well, and then utilizing it for pullouts and stuff like this. So it's interesting to see the rotating of what's happening with banking and financial tech and everything like that, where a lot more people are starting to really put their money into the brokerage accounts, usually in safer investments, especially if they're going to utilize it as a checking account, but maybe putting into things that are slower moving and have a higher chance of not drastically diminishing over time. Here's your top gainers. And what I like about this list is you may not see a lot of the popular tickers on here for top gainers. You know, you're not going to see too many times. You're going to see Tesla, Apple, Microsoft, so on and so forth. Those move, but they're talking about top gainers from a percentage of market cap. But this should give you ideas on potentially some of those penny stocks that are moving and shaking. And a lot of times, once the penny stocks start to hit that 25-35% on their return, that's when a lot of bulls will start watching it for continuation, and then those penny stocks can just boom with a little bit of volume, so we pay attention to them. And here's your top losers. And remember, what we like about the losers is this gives us opportunity to see what's kind of gotten beat up. And sometimes, especially if you got popular tickers and they're just absolutely destroyed, right? And they maybe drop like 30%, 40%, something like that. You can catch them at the bottom. And usually they may not come back fully. You may not see that Microsoft 180, right? However, they can usually catch 10, maybe 15% from a knee-jerk type of dump. So that's why we like these losers, because it gives us opportunity to watch some of these things at the bottom and see if we can get that bounce play. And here's your most active, and no surprise, Tesla at the top of the list. You got the Qs, and we're starting to see some activity in SPY and some of those other car names too, okay? You know, we're starting to hear little remnants of these other big name car companies that are kind of pushing into the EV sector and stuff like that. We're starting to hear the GM, the Ford, so paying attention to these, okay? Also Snap and AMD, SoFi, we're starting to hear some of these big type of names coming back into the swing of things, which tells me that volatility and volume is starting to come in there, and we could swing drastically going both ways. So we're paying attention to these so that we can follow the trend, get some good paydays, either going long or going short, but following the money. And here's some of your unusual options. And what we like about unusual options is it gives us a clue into what the big money is looking at as well, and kind of gives an idea. You know, a lot of times when you see a huge, odd type of buy on a stock or something, kind of gives you a little idea that potentially maybe they got a little inside information, and then it could drastically make a binary type of move. So we like to pay attention to these. You see that Amazon one that got my attention because Amazon's kind of struggling, to hit those higher levels, but you got this call that's pushed out to February 17 that's at the 119 level, and we like that type of call. The T-Mobile one, TMUS, that one's an interesting one as well. I like that one as well. They're the leader in the 5G sector, so we pay attention to these, and these can give us some ideas at least to, weed through all of the waters and the mess and the chaos of the stock market, and we can kind of focus in on a few of these that we enjoy, and it can give a nice idea so that we can do some DD, and if the trade makes sense, we can go ahead and pop in. Maybe not at the same strike, maybe we choose a different strike, but it gives us a little bit of an idea, like the thought-provoking content to make us go do some homework on some of these tickers. Also Starbucks, I'm liking that one as well, and Johnson & Johnson for a put. I don't know if that one's going to pay off because it's already sunk pretty hard. I think Johnson & Johnson's a Dow stock, and that likes to bounce a little bit. But those are interesting, and that's why we pay attention to them, so we can do some research ourselves, get spun up, and make educated decisions. Here's your highest stock ticker, 30-day and 60-day IV. What we like about implied volatility is that's what makes derivatives move, okay? When you're playing with stocks and shares, right? You got, extrinsic value, okay? You know what the stock is, and you know where it's going and stuff like that. If it's higher, you're making more money from, say it's $50 and it's $55, you're making $5, right? Well, implied volatility is giving us percentages that are making derivatives move based off the Greeks, and it's what pushes our premium. So it's like we got an implied volatility, it's intrinsic value, right? That's telling us, okay, we got some value here, but it's not necessarily set in stone, but it's an implied value on this for a dramatic push one way or the other. And that's what gives us the value for our options. And hopefully it gets kind of a binary or a volatility move in the direction that we're betting that the option will go. And here's your top trending tickers, guys, and no surprise, you got AMD right there at the top of the list. Also Meta. Snap has came back into the picture with some earnings. Definitely be interesting to watch that. You got EA Games, GM, all the ones that we like to play. The AI one, that one's huge. Pay attention to those AI companies. I've been picking up penny stocks in AI software type companies because that's another boom type of disruptive category that will likely continue in here in the near future. So definitely paying attention to Pixie. That's a penny stock that likes to move violently, so pay attention to Pixie. And Spot, Spotify was popping, okay? Spotify did really good on some earnings, man, and they popped hard, so we're paying attention to these. Peloton, I don't know, I'm a little leery on that one. That's still speculative, but Peloton's very popular, and get a little bit of volume on this beat up stock could get a short squeeze in there. So that's why we like to pay attention to these watch lists, and we keep track of the stocks that we like, so that if we see them move, boom, we attack, strike, destroy, and we go ahead and try to make some money. Stocks I like for trades. All right, so let's talk about SPY first. Okay, SPY is so dependent on how the FOMC goes, okay? So we got the top level, but we're having trouble passing through this 406 level. I mean, we keep going up to it, we keep coming back. We popped the other day over to 408 and then came immediately back down. I got a little bit of feeling that we're probably going to get some bearish sentiment. So I think if we start to creep below and hit below the 403 type of area, I think that we can easily come right back down to 400, which is why I got some 398 out of the money puts pushed out until the 2nd of February, just as a hedge in case we get that downward pressure. Tesla's another one. I'm a little bearish on it because we peaked up to that 180 area, bounced around, consolidated at the top, and then we broke support and came back down. Typically, when you see a jackknife pattern, what happens is it comes up sharply, consolidates a little bit, and then you come back down and you get about a two-leg strategy to the downside. So I'm actually bearish on this. I'm thinking that we could settle around below 160 and start to find support down there and then pick up on our run from at that point. And call me pessimistic, but I think we got some trouble with Apple too. I don't think the phone sales are going to be there. I think their margins are going to be less than anticipated. I know people are expecting Apple to be the savior to the market rally and stuff like that. And with seeing Tesla booming and some of these other ones boom as well. But I think Apple comes down. I think that they come short. I think forward guidance might be a little bit more bearish than investors are interested in. And I think we come down from here. So I'm definitely short on this one short term. And I hope I'm wrong because I would love my shares to be booming. But I'm looking at the derivative side of the house and I'm betting on the short side. All right, here's an interesting penny stock, and I want you guys to pay attention to this. I like this one. I like this chart. Look at this chart, man. This is a nice chart for a penny stock, and it's definitely got some momentum coming to the upside. Look like we might cool down a little bit, but it definitely has a little bit more push if it gets the volume, and I think that we can go up there, retest the 830 area, maybe even push into the 9, and that would give us definitely a decent little $1.50 push. You know, just imagine buying 100 or even 1,000 shares of this. That's a nice payday right there on a quick trade. AMD, definitely, I'm hoping that this continues and we break through this 78 wall that we got up here, okay? Next stop, if we can break through this level, is around that $83 range. So definitely looking at this, I got calls on this ticker, and I'm hoping that these push like I expect them to do tomorrow when that bell rings. But again, you know, the FOMC could make everything come crashing down. So I'm looking to secure those calls at the bell. Snap, boom, big dump. Now, what I like about this snap down here at this level, okay, if we can hold this level and stay above this 950, you know, even the 925 range and bounce around, it could give us a good opportunity to come in at support and catch this on a little bit of a rebounce, okay? You know, it was a knee-jerk reaction right here, 15%, definitely dump city, right? It could continue to go down. It's been lower before. However, I would like to see positively some bouncing around at support before I'd want to go long on this. But if we can find that, then definitely would look at going into a $10 call, maybe even an $11 call and pushing out. We have $15 calls, leaps pushed out into 2025. So definitely we're still keeping those open, but I'd like to get into something to get a nice little short-term bounce play. Here's that AI stock. Now, what I like about this is we're starting to look like we're trying to create a pennant, okay? So I got your top and your bottom, and I like those triggers for continuation to the upside or continuation to the downside. So definitely paying attention to AI. And while you're at it, when you go look at AI, look at their business profile and see what type of industry they're under, and then go research some other AI type of software and engineering stocks as well. Get spun up on those because it's definitely a sector you want to pay attention to so you can get some huge growth potential in the future. All right, and last one I'm going to leave you with, Match.com right here. They sucked on some earning play, looked like a big, huge dump. However, I like this for a bounce play, okay? Definitely 10% drop, all right? They come down to that 47. We might get a little bit more to the downside, but I think it would be appropriate to see a little bounce play coming back up to $49, maybe $50 to test that area. So I'm definitely looking for the bounce play on this one. And so that purple line is kind of my area I'm looking to go in if we find that support around the $47, $46 range. Upcoming TWR classes. Plan your battles with Traders War Room classes. Join TWR on 5 February at 1 p.m. Central Standard Time and learn how to control your emotions and manage your risk. Listen, emotional trading is an account killer every single time. But managing your risk and planning your attack assists going from this to this. Calm, cool, and collected. So you can win at trading and gain consistent profitability. Join us on 5 February and learn how to manage your risk and control your emotions while you trade. Going from this to this. Register today at traderswarroom.com/upcoming classes or use the link in the description. I'll see you there. Traders War Room Trading University is happy to announce open registration for our next option fundamental course. Did Wall Street make you feel like a complete loser in 2022? Or was everything going great and you blinked just for a split second and got repeatedly kicked in the you-know-what over and over again? TWR is here to help you. Our university's fundamental course is an in-depth 5-week-long course that's done live via Zoom platform. Our virtual classroom is where you can interact with the instructor, other students, or see copies of the classes right there on the platform and rivals that of traditional online education. Testimonials from previous class graduates are proof that our cradle-to-the-grave approach works in giving you consistently profitable skills to trade options. Registration is open today. Links are in the description or go to traderswarroom.com. I will see you there. Let's go to war. Join the TWR Investment Club. Check out our free chat to learn more. That's it, team. Don't forget, make the market bend the knee in 2023. Join TWR and bow to no one. The link is in the description or on the website at traderswarroom.com. Let's go to war.
Simone. Hey, you know I'm on that though, man. Y'all, come join it. In the Traders War Room, warring with the market every day we on Zoom. Never gonna quit, ain't no way we gonna lose.